Good evening. Ira Epstein of Linn & Associates with your SPDR ETF wrap-up, and we're now on Wednesday, and this is the 12th of May, 2021, the evening. All right, by now you know about the big break in the stock market. Interesting. So what the market gets is what it's looking for. The market's been expecting inflation. It didn't expect to see as much as it got. The two culprits in it appear to be used car prices and rental cars. Okay, we can all live with that. First of all, they're going to get the chips back online. The Fed's definition of the inflation is transitory. If the chips come back, the manufacturers will be making the cars again. Number two, we have just come off a terrible jobs data, and now we've got some inflation. So I look at the glass as this. The glass was totally empty, according to the Fed, after that jobs data. We hadn't had inflation, and we certainly didn't have very good employment. Now they've got the boost, 1 month boost in inflation. They see the reasons for it. So half full. What don't the markets like? Well, the market's looking for a reason to say the Fed's going to move on interest rates. If the Fed moves on interest rates, growth stocks get hit. Why? Because that's what they need, cheap capital. And the capital gets more expensive. Just think of it that way. I'm giving you the whole scenario in such a simple way. When we take a look at ARK was down another 3.7%, not quite as deep as it broke the day before, but still down. The tech stock's still under a lot of water here. When you take a look at what's going on with the swing line, you still have lower highs, lower lows, but it's very difficult for traders to say, okay, it was 127, it just went down to 98, it fell 27% roughly, and I'm going to go short the market down there. I'm not saying that it can't happen. I'm saying there should be some logic here. The companies that this owns aren't bad companies. That's the point I'm making. What else is happening? I'll give you the real bad news. The bad news is this 18-day average is marching to get under the 200. That would be a bearish crossover in the market. You would then have the 18 under the 200, but the 100's up here. It is not a classic bear scenario no matter what happens on the interest rates, but it could be another layer to the downside. So far, what has worked? May 12th. Sell May and go away. So far the high for May, if we come back over here, this is May 3rd. Let's look there in the ARK, 116.91. Does it ever close higher? No. I'm just giving you a viewpoint that I'm seeing. So this is certainly in trouble. And even now, as I said, that 200-day average is going to be more resistance in this. The market's staying on the right-hand side of the Bollinger Band and hitting it every day. I explained to you yesterday the strongest glue is called Gorilla Glue. And when the market just lays on that, I call it the Gorilla Glue trade. It's often accompanied when stochastics embed. Now take a look with me. Both numbers of the slow stochastic are under 20 on a close today. Yesterday they were under 20. Come on, one more. Give it to me. Day before they were under 20. That's Monday and Friday. So you've had your embedded reading. You're 4 days in a row. This tells me that regardless of what I might think, the market on each rally is going to get sold in this until that red line closes back over 21. When it closes over 21, I think the shorts will abandon those ideas. Until then, I think they're aggressive to the downside. Notice how GameStop didn't follow everything today. It's just sort of hanging in there within these Bollinger Bands, as I call that pipe. This makes you crazy, this type of trade, because you don't get much movement out of it. I read this market, I have to say, right. You come here, and we were right here, and I said, I think this market has peaked out. I said it to you here on the close. I said, you lost your embedded reading. That could be where the game ends. And as you know, today, Biden called in, President Biden, let me give him all the respect. President Biden called in leaders of the House and the Senate. They had what Nancy Pelosi calls a good meeting. I don't know where she gets her definition, but I wrote what she said. And in all fairness to her, she said at least they've identified what they disagree on. That is progress. I agree with her 100% on that. The problem is the Republicans are saying they're not giving ground on any taxes. They don't want to hear about corporate. They don't want to hear about estate taxes. They don't want to hear higher personal taxes. They are all for infrastructure. They've thrown out a bill that can be paid for just the way we did with COVID, and that seems to be where they want to go with that bill. That gives you an idea of what the president has to deal with. So the odds are he's going to try, and that being the president, is going to try to see if he can get enough votes together in the Senate to at least get a tie so that Kamala Harris, our VP, can split it. I don't think they'll get to that point, but we don't know. Right now, that's why you're getting the pressure here. All the money suddenly off the table in these kind of talks. Then we look at Apple. Apple down to its 200-day moving average of closes. Very oversold. Okay, the market's challenging this whole support zone now. So that zone comes in between 116, 122. That's the zone you're in. Trend is down. Same thing in what? XSD. What? By the way, I said trend down. It's not the trend down. The bias is down and momentum down. You have a higher high and lower low into the first support zone. It is not a trend down. I'm not blind. I can see the market is falling, but the true pattern of a downtrend is lower highs, lower lows. You don't have that in semiconductor. You have a higher high and a lower low. So this is part of that gorilla glue trade where you just latch on and you keep going. Do you have the embedded reading? Well, both numbers today were certainly under 20, yesterday under 20, and the day before, not the day before. So you got it. One of the signs to look for, let's look the other way in the market, not with the current downtrend. When you get these red lines popping on a close over 21, whichever ones do it, the odds favor the market saying it wants to give you a correction to the upside. Got it? So that's one of the things that I'd be looking for. When you come to PODX, the trend is down. You're riding the lower Bollinger Band. You're oversold. You're stuck in this sideways action. Nothing. If anything, you're bearish until you take out today's high. Today was an outside day down. So when you get markets that did have an outside day down today, and you have a lot of them, if you take out today's high in the next 2 days, it would be a sign the markets want to run back up to the closest major moving average above them, but it has to be either on Thursday or Friday that occurs. When you look at ESGU, first probe under the 18-day average where it stayed there, oversold. You're trying to break out of the sideways action in the Bollinger Band, and it's certainly the first day of it. We'll see if tomorrow can add something to that. The energy sector, well, it's probably going to be lower tomorrow. The pipeline from Colonial is open. They opened it at 4 o'clock Central Time. It'll take days to get it back to normal. They're not spilling the beans on what they've done, but it sounds like they have control of their computer system again. As such, it takes about 4 or 5 days for the system to get back to normal. We'll never know if they paid any money. I mean, if I'm them, I'm going to say we didn't pay any money, but that could be it. I hope they didn't. I hope that their people were bright enough to break the hack and do that. That would be great. They certainly had to have the FBI minds, private minds. They have the money galore to do that. I'm praying they did. In the meantime, you've lost your embedded reading. That often leads anyways to a challenge of the 18-day average. Let's just keep our eye on that and see if that happens. In the emerging market ETF, another challenge of the lower Bollinger Band. I'm looking for support there at 77.41. Look at that momentum down. You had gotten overbought. But many of these markets aren't trading in a trend. They're bouncing back and forth in these Bollinger Bands. This is not the place to be. The place to be is temporarily in some cash in a lot of these. You're starting to roll over in the slow stochastic here. Unless you're up tomorrow in this market and up early in GLD, you could see this market roll to the downside and come back to challenge these two moving averages. What are the odds of staying up and over the upper Bollinger Band? Not good. Now let me tell you what I'm going to hate. The market had the first shot at doing really well, and if it takes out here this low of yesterday, which was 170.27, well, that's going to turn the basis this way. You're going to have lower highs, then a lower low. Momentum will turn down. It calls for a challenge of that 168 area. So you need a piece of news to not let that happen. I don't think you're going to get it. Same in the gold miners. You got overbought. First challenge of the 200-day average in the Bollinger Band. You have no idea how many people, when I'm doing these shows and I say, I think the market's ready for a failure here, write me to tell me I don't know what I'm doing. I mean, it's a blessing that they do it, because the people that are writing me don't know what they're doing. And I look at it and I just go, okay, that to me is a sucker's play. And I think I'm going to end up being on the right side. TLT, higher high, lower low. Now here's the bothersome part. You had a breakout. Now let's define a breakout so I can give you a free lesson here. To me, I can't tell you what other chartists do. When you close under the Bollinger Band in the bottom quadrant, I didn't say half, the bottom quadrant, which you did, and you do it 2 days in a row, which you did, I now have what I call a downside breakout. And I know you're going to say, oh, he's saying market's just going to crash. Not what I'm saying. I'm saying I don't think you're going back over that high, period. I think you've now got your top formation in place, and I would expect on rallies opportunities eventually to go short. Would I tell you in this free video to go short when you're oversold? My definition of oversold. You know better than that. It isn't going to happen. FXE, you got up to the upper Bollinger Band. What did I tell you as you were up here? And I know what I said. I said, folks, that is where I'm looking for the market to fail. And you may not agree with me, but you're right back to the 18-day average. That's why I use Bollinger Bands the way I do. And if you haven't looked at Bollinger Bands, maybe the thing you want to do is take a look right here. For $60, $70, right in that range, depending if you're one of my subscribers. It's $75 if you're not, $60 if you're a subscriber to my other research. I'm going to teach you tricks with this Bollinger Band I know you haven't seen. And I think they're going to stick with you. So why not take a look at this, open your pocketbook, spend some money for yourself. It isn't for me. Your $75 isn't going to make me rich. I'm Ira Epstein. You have a good day. Take care. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.